This is Justin Pulitzer. This is my weekend video for the week ending December 7th, 2014. A lot of symbols to get through, so let's just do it. So as you can see, SPY has been in a bit of a consolidation of range here. We did have a pullback. We stopped here just ahead of the 20-day moving average. Usually when the SPY is more than $4 to $6 away is usually extended. You can see this consolidation has helped catch the 20-day moving average up, so now it's only about $3 extended, which isn't all that terribly much. So you can see consolidation, testing above. I do think at some point this breakout is going to get retested. I'm not sure exactly when. My crystal ball is still in the shop. But I do believe that at some point we will come back down and retest some of these major moving averages, including the 50 and the 100-day moving average. It wouldn't be conceivable for the breakout to be retested and possibly into a little bit more into somewhere into this range. I still think that that would still be within the range of healthy correction. I'm going to stick with what I had said in the last video, and I think anything between this 199.06 and this 201.90, somewhere in that range, is still within healthy correction territory. That said, the market has worked off a lot of the excess that you could see from here with this sideways consolidation. So in my opinion, anything that's over 207.84 remains bullish. You can see that we tagged out this 1.272 fib extension, and a full 1.618 would take it up to 214.17. I don't know if it necessarily goes there in a straight line, considering it's been up a lot, but like I said, we have consolidated a bit, and it is very possible. This is also a very hard time of year to, I guess, play short, because you have a lot of fund managers trying to play catch up to the benchmark and make up for, I guess, lack of performance. So it seems like every dip has been getting bought up pretty quickly. You can see here, I mean, we had this gap down for one day, you had breakaway value, and then the next day we took it right back. So it's still showing buy the dips mode as far as the SPY goes. You could take a look at the Dow Jones ETF. That's also here now at new highs. It's just been in this steady climb. That 1.618 fib would take it to 182.62. So we're getting a little bit closer there on the Dow. So I'm just keeping my eye on this. This is This is starting to get a little bit narrow as far as the trend line goes, and I'm just keeping my eye, on most of these stocks. A lot of these charts look very similar. I'm just watching trend and seeing if that can hold or break. At some point, it is going to break, and that probably means the quote-unquote easier money is made. My opinion, you're going to hear a lot of this theme here being called bad trade location, and I'm going to be discussing that in a little bit. I think I'll start right now. A lot of the people here that are chasing aren't strong hands because they're kind of late to the party and they don't want to be bag holders, but they do want to benefit from upward motion in the market. And I think the reason why you keep having these liquidation breaks is because these people buy, don't get rewarded right away, and then the price comes down, but then it gets bought right back up. So with this, anything over this candle, I think the 178.60 is still bullish, and of course we're watching that trend. Some of the ones we watch more are the IWM. You can see this has been in a much more choppy type of a mode with consolidation. I would say price is kind of a little less clear here. I would think, though, I've discussed this level a number of times in my videos. This 117.37. As long as we're over that, it puts the all-time highs in play. Anything below there gets a little less certain. So it's kind of like a bit of a seesaw action around this area. You could see stochastics are starting to bend back down, but I wouldn't really say that there's much to glean out of this pattern other than, it's when it gets dipped, it gets bought up, and when it gets bought up, it gets sold. So it's just chop pattern here. One of the stronger ones also has been Qs, although we aren't at the highs that happened the other day. We had a bit of a flash crash in Apple, which I think accounted for some of this. I'm going to discuss Apple in a moment, but you can still see this is up here in this kind of flag pattern. And we kind of are with we're not at the highs like the diamonds, but still looking fairly bullish. I do think at some point that this breakout area is going to get tested. You can I don't know why this one is still green. I usually gray out ones that aren't currently in use, but you can see cautiously Excuse me, it's been a long weekend. Cautiously, this is still bullish. We're still in trend. As long as the trend holds, the trend is your friend, bullish. We could just chop sideways here and then extend up. If the trend breaks, then we start looking at some of the consolidation high levels and retest levels. I do think, again, at some point, I do think that this is all going to get retested. It's just a matter of when. It's tough to have to play that though, as long as we're in this uptrend. Apple. This to me, if there's any kind of more clear signs, again, I apologize that this chart is mucky. This is the one I actually use, so imagine looking at this on a daily basis. But let's get really narrow here. I had shown you in the other charts that the trend is sort of has been your friend in these, and this has had this sort of upward. It broke out of the main channel that I've been discussing for a while, and we formed this new channel here. And the other day we had on the 12-1 we had a bit of a flash crash in Apple. We did retest that old channel here. It held. We rallied back up, but we have made a lower high. So what does this mean? It just means that Apple was probably a little bit overbought. There was a liquidation break that just got a little bit more severe. Maybe there was some kind of a fat finger trade, or someone's stops got taken, or there was someone in size who had to sell and they didn't manage their orders well, and the stock came down. For me, in my experience with Apple, and I've followed this stock for quite some time, I find that when Apple trades over the 20-day moving average, it's the most bullish. When it's below the 20, it gets a little bit less certain. So Friday, we tested it basically to the tick and held on the closing basis. So if you're long Apple, I would say you're still quote-unquote okay, but you should definitely be in caution mode. If Apple loses this dump day bar, this to me is now going to be the key. Anything over this bar's high, the 119.25, and I think that the 1.618 fib of 128.97 is still in play. So if we can take out that reversal bar, I would be thinking the trade is long. The flip side of that coin, though, is if we do lose the low, that 111.27, I do think we're going to come back a little bit lower and maybe retest the 50-day moving average. Possibly even a little bit lower. There was some consolidation here. You can see in this 110 area, this 109 to 110 area. And the real breakout of range was back down at 103.74. I do think that is possible to be retested. I don't necessarily know that if it's going to be retested with any relevance to this particular video. Apple, the dips have been bought. The stock is still obviously bullish. It's just showing a little bit signs of some fatigue and might need some consolidation. I would be a buyer off the 50-day moving average. I think a lot of people will be looking at that. I don't know where that will be at the time if it gets tested, but I think that's a good location for a right or right out trade. If Apple does get a little bit flashy again and the market has some kind of a weakness, this area, this 103.74 to 104-ish area, you can see that's the 61.8 fib from this range. I think that area would be a pretty solid buy for a move back up. So I'm going to be keeping my eye on that. Just cautious with Apple. Not saying bearish, but cautious. Let's go on. Another one I'm always asked about is Alibaba. This is another one that's showing some cautionary signs here. It had this markup. It got 120 to the tick, and it has sold off since. It broke trend here. The trend here, I had said, was a little bit steep. We did break it. It came back up. We made a lower high. We now made a lower low, and in danger of now making a lower high again. So my theory with this is we now have a 50-day moving average. I think that we can trade against that if we get down there. But for me, a really solid buy in this stock will be somewhere between the halfback of the 101.41 and the 61.8 Fibonacci retracement, which is 97.02. Tucked in there neatly is the IPO high of day, which was the 99.70. So somewhere in this range, I think, is a pretty solid buy for a bit of a longer-term swing. The stock might not get down there. It is also possible that we take out the downtrend line. If that downtrend line does get taken, like one of these highs, if we could take this 111.68 and power up, then I think that the stock probably is going to be a play back to the upside for at least 120, maybe beyond. But for me to really play long, I need to see that retest down here, or I need to see a break of the downtrend line. Since then, I've just sort of been playing it Babe Ruth style with my bat on my shoulder, waiting for my pitch to swing at. It hasn't come yet, and hopefully it will soon. Either one of those scenarios, the break of the downtrend line or the retest of the breakout. What am I doing? BIDU. You guys have been asking me to discuss some other stocks that I don't normally cover in the video. This is one. The people have spoken, and I will cover it because you guys had requested it. If you guys all have, stocks you want to have covered in this video, be sure to hit me up. I'm happy to oblige on occasion. This one happens to fit the criteria of a stock I would cover in my video, so let's do it. Let's take a little bit of perspective. Since this isn't one I do cover regularly, let me give you a little bit of color on it. BIDU has been in an uptrend, an up channel for quite some time, and you can see it has been testing on the outside of the uptrend channel for a little bit. It's also been in some bit of a consolidation. Here you see we can fill the gap. We now came back up, and we are now retesting that gap up high of day, and also a 50-day moving average. It's also possible that BIDU is trying to put in some type of a new channel. You can see I kind of have one drawn in gray. It's not really confirmed yet because the upper part is sort of speculative, but the this uptrend definitely has a couple of points to mark, so it is definitely very relevant. My thinking on this is it's a right or right out trade. If it can hold the gap up high of day, and you could see we did hold that and the 50-day, I think that this low of day is a really good reference long if you're playing, if you want to play BIDU from the long side. For me, the trade location is got to be right or right out. I would feel a lot more comfortable buying it on such a defined trend line, or I should say channel line, more toward the channel low. Obviously, that's considerable amount of time away. The stock has been bullish. It might not come down there for a while. It could also power back up and retest the high and maybe make a new high. I think, like I said, as long as we're over this consolidation area, it's okay to stay long. If it starts getting lost, like I would say anything below this 50, anything below this 100-day, you kind of got to bail because you don't have great location. It's not like you're long from back in this consolidation. If BIDU does rally back up and we get through this downtrend line and back through this channel, then I would say that the channel is probably going to be void because we've come through it so many times, and it's probably looking like it's going to be more into this gray channel. So let's keep an eye on that. I think Friday's low of day is really key, as is this gap high of day here, this 126.76, and where we kind of stalled out here, 229.60. So between the 226.76 and this 229.60 is a really key level for this stock to hold if you're kind of just dipping your toe now. That's BIDU. Let's go into some of the rivers and lakes that we're used to. And let's see with Facebook. All right, this stock has been an absolute chop fest here. We had the gap down, and it's been in this kind of listing area where we've been making lower highs. We've established a bit of a trend line here now because we have a higher low and now a higher high, which I had said here last week I thought was this breakout was bullish. And it kind of spat in my face here with a bit of more of a decline than I had been expecting. I had been talking about this. I have this. I'll discuss this alert in a minute. But for me, what really kind of changed the tone of the nature of this here, which got a little bit iffy, was the fact that we got below the gap high and we also took out the 50 in such a dramatic fashion. We held the 100, which has been an important area. We broke below here immediately. You can see, though, it was kind of a bit of a look below and fail because we had rallied up strong. And now we also now made a higher low, which I like. I also like the price action on Friday. We did close above the 50. I really need to see, though, for Facebook to kind of, for an ad or to get bullish again. I'm still long. I'm a little cautious. If we start losing this secondary trend line here, I'm probably going to just bail. I would be an adder, though, if we can take out this dump bar high, which was 77.32, and for sure if we take out this downtrend line, and anything over this bar absolutely is another add point to add over 78.27. I do think this gap is going to fill. I just don't know when. I don't think the highs in Facebook, the all-time high or whatever is in. I just don't know when we're going to repair it. It may take a little bit of time. It may happen sooner than later. I'm just watching those levels. If those levels get breached to the upside, I think the trade is still long. If we start losing this secondary trend line, for sure this higher swing low, which was the 74.40, if we lose that, I'm going to be a little less confident with the trade. So right now, it's just sort of a wait and see. I'm sure we're going to get some resolution on this next week. I highly doubt we're not. So just set your alerts, the 76.88, the 77.32, and I would use this as a potential stop out here, the 74.40. If that gives, I think we'll retest this low of the 72 half-ish area, and if that gives, we may have to come back and retest the low in this move, and possibly even the 200 MA. I do think those areas will be buys though. I am still bullish on Facebook, but like I said, just need to see. It needs to kind of show me. It's in a show me state right now. It's hard to talk about Facebook without Twitter. Those kind of two always seem to go hand in hand these days. I have been discussing this stock, saying that I don't really see the bull thesis here at the moment. You had a chance to rally here. You had a very swift reversal. I need to see this bar's high get taken. That's the 43.95, and then the hold on a minute, let me just zoom in a little bit here. So I need to see this high of day, this reversal bar high of day, 43.95 get taken, and then a break into the gap over 44.58, which was the high of day from the gap down. I had been talking about Twitter being in a range somewhere between 35, which is the 78.6 fib. It's also an important area over kind of really over the bulk of this consolidation. I've been saying that I think that gets re-seen. It's stayed a little bit stubborn longer than I thought. If that does come down, I do think the 35 is an area to kind of test your toe to buy the dip. But that's right or right out, because if that gets lost, it's very conceivable also that Twitter comes down to retest this 29.51-ish area, which was the low before this run back up. I don't necessarily know that happens. I do think that this area is kind of okay. I think Twitter is sort of caught in a range somewhere between this 35 and like 43 area, 42, 43 area. I've been saying 42. I'll give it a little bit more room just because this came up. But I think it's just caught in this kind of this range. The problem with this stock is that they've only had one good quarter. And you can see that was here. And once that high of day was lost, the stock got a little bit squirrely. You can see I had been talking about that being an important area, and here we gapped through it, and we never have really looked back. They tried to rally it a bit, and it's just come back. So for me, this is just a hands off. It's a wait and see until it can start repairing itself. I think a stock like this will only do well on a sustainable basis if they can report not only one but two solid quarters. You can see what happened here after this one quarter was good. It was kind of begrudgingly coming back up, and now you also have this supply overhead. So I think any rally, people who kind of bought the dip in Twitter or kind of chased it after the gap are going to be a little bit anxious to be made whole. So if that gap fills, I think that there could be some sellers, but I do think that will be tradable up. I mean, if we can get over here. But as of now, right now, a long story short, just sit on hands, wait and see. One that gets talked about a lot on the stream also, one I've been watching, is Gilead. You can see we've been in this downtrend. I had been talking about anywhere on this red line has been a sale. It didn't disappoint this time. For me, the key in this stock is $100. You can see we had a bit of a look below here and fail. We came back up, and I had been talking about this rally bar, a high of day, being key. On Friday, we did get through it. We did run into some 100A resistance, and also some of this consolidation area resistance, which kind of picks in at 105.75. I think you can be long this stock as long as it's over the 103.97, but I would be a little bit cautious. If it comes back down into range, this trend here must hold. I am liking what I'm seeing, though. I am liking that I'm seeing higher lows. I'm liking to see that when it got below 100, it has been snapped up. If it comes back down there, if you lose, I would say this Friday bar here, the low of that is 102.15. That's kind of the meat of this consolidation move. It would show to me, though, that this look below was not correct, but also this look above is not correct as well. This low of day has got to be your stop, in my opinion, this 102.15. Anything that's below there, which is this 100 MA and this look above range area, if you're below that, it could get a little squirrely, and if it does come back down again and retest this 100, it might not hold, because here sellers were shown that they were wrong. Here then buyers would be shown that they were wrong. I think, like I said, just keep those levels in mind. Over this consolidation range, this high a day here, I think is long. Anything below the low of day on Friday, I think you got to either be flat or you might even want to try short. But that is my analysis of Gilead. Google, really big laggard, not performing well at all. It is coming back down pretty solidly. I do think that it will set up for a long somewhere, maybe on a retest of these lows for a bounce, because it's starting to get a little bit steep and oversold after so many days. This also coincides with the trend line from a while back. But this is again a stock making lower highs and not quite yet lower lows, although it is kind of getting close there. I think that to me is the play with Google. If we do break this downtrend, I think if you can get over Thursday's high of day here, that to me would be a long. So anything over 542.69, I think we can quickly come back up and see the 555s, which is also the 50-day moving average. That would be a nice little day trade or swing trade for a couple of days if possible. But Google isn't showing me anything here. It's sort of just been listing lower. So if you're long Google, I would be really in cautious mode if we start losing these lows here. Just because I do think we'd see that retest, and there's no guarantees. It might really wash out and come back lower and kind of try to fill its gap. Google has a gap for a while now. Let me take a look. Could I see it on the? Nope. It might have to be a little longer. Let's do a 3-year. Yeah, you can see if we start losing here, Google is in danger of really filling this gap, because this you can see we rallied up, and we did come back down here. We retested the gap. It rallied up again to a lower high, was in consolidation, and now coming back down. It didn't take this area, but it's in danger of taking it if it comes back down again. The more time support gets tested, the less supportive it becomes. If this trend line here snaps, I do think we'll fill up to come back down and retest the gap here, and possibly that would coincide, if it takes a little while, with this really longer term primary trend line. So that's what I'm looking big picture with Google. That may not happen. We may break the downtrend. So let's keep an eye for a buy over the downtrend, or for some type of a short play down. I'm sorry, I would say it's a little late for the short here, although if you're intraday and you're a gunslinger, you can play it. But I would think that this area might be a spot for an oversold bounce, just because we've had support there before. It probably can hold again. If not, let's be real careful and look for a short below this area for the fill up of the gap. Although like I said, we're in time frames here. We're going to be for me right now, I'm not in the position. I am just waiting to see. I'm looking for a buy on the trend line here for a right or right out play. If that doesn't work, I'll flip short and then play it that way. So that's how I'm personally playing it. Sorry if that wasn't clear enough. Price line is another one that has been a real laggard as far as these big momentum stocks that made $1,000. I really think that a lot of these stocks just got overbought last year, and they've just been consolidating a bit. They had huge runs, and they just need to consolidate some and play a little bit of push and pull. That's really all I think is happening here. I don't think there's anything super duper changing in the fundamentals of these companies, although Google does have some possible problems with the European Commission and some type of a breakup, so I'd be a little bit cautious with that. I think that's really what's going on with Google. Priceline, though, you can see has been making lower highs in this time frame, lower highs, and now the pattern has gotten a little bit steeper with lower highs. And here we even broke this secondary trend. It's kind of been hanging out around this 50-day moving average. If I could see this secondary trend line break, I think it could be played back up long, or possibly to come back down here and retest the low. Similar story with Google, where it might be a right or right out buy off of these lows. So that's what I'm watching in Priceline. One I don't talk about much in my videos is Starbucks. I'm sort of sorry I haven't. I have played this one long periodically on my stream, and I've discussed it a bit. And you can see we've taken out the highs in Starbucks. The problem for me here is that if you're not already long, it's kind of hard to say you have good quote-unquote trade location. This trend line has gotten really steep. I mean, as long as this trend line holds, you can stay long. Obviously, this was day one of the breakout. The problem is you're kind of coming up from the bottom, so to speak. This has gotten to be it's starting to get a little bit steep. So I do think some type of a back off would be prudent. If you want to play right or right out, I think a retest of the breakout would be good, or somewhere on the trend line. For me, it's a little bit hard to chase on. I mean, I guess you can do it because it's only day one of a breakout, but just for me, the way we got there, it's come up in such a steep fashion that it's a hard chase. Sometimes you have to say you just missed it. I do think Starbucks is going higher. I do think that the play in this is a buy the dips long. But for me personally, if you're not in the trade already, I just think that you have to either play it off the trend line. It's hard to chase the breakout just because, like I said, not good trade location. I think you sometimes just have to say you missed it. And if you're late to the party with Starbucks, I think you kind of have to either buy the dip or just say you missed it. It's a very hard chase here. Same kind of thing goes for Taser. This is one I have been bullish on. I haven't talked about it in the video, but I have discussed it a little bit on the stream. And for people who have asked, I've said I thought it was a long. You have a lot of news right now in this stock with Michael Brown and that Eric Gardner case in New York. A lot of people are looking to do, the body cams for the police. You can see that this has come up and is getting very, very steep, even worse than Starbucks. Like Starbucks is kind of right here. You can see Starbucks will probably do something like this as well. So I do expect that stock to go higher, but you can see Taser now for me has gotten a little bit steep. If you do a 1.618 fib extension, that takes it up to the 27, 24s. So any type of a spike move on this anymore, I would be looking to take profits on it. If it does come back down, you can do a right or right out trade somewhere around this 2083 area, which was the breakout. And maybe if it comes a little bit steep, it would coincide with this cautionary secondary trend. If that snaps, a lot of the news is now baked into this. It could be a sell the news. Maybe we do see somewhere into this primary trend. Maybe that would coincide with a high volume node down here. Obviously, that's a lot of points away, a big percentage away. But it has moved up pretty big, and I would be loath to say, chase it up here. I'm not a chaser. I don't like playing that game. I do think, like I said, a test here for some type of a comeback down here and a bounce would be more prudent. I do think longer term, the stock has the potential to go a bit higher, but if you're not in it already, I think it's safe to say you probably missed it. Tesla has been one that has been sort of a mess also a little bit. The same kind of theme as Google and the same kind of theme as Priceline. I think it just ran a lot and it's just been pulling back, and you've also had Morgan Stanley playing games with upgrades and downgrades in there. I don't like what they're doing. Feels very manipulated to me. You can see, I'm sorry again, this chart is very messy, but we had a downtrend here. It broke, and I had said I thought that this was looking a little bit more bullish. We retested the channel high. We came back down, we tested the channel low, but we now have a channel break. Not only that, we've also lost these two hammers here and the 200-day moving average. So to me, that tells me that this low here, this 217.32, is the must hold. If we lose that, I do think we're going to come back down lower and have somewhat of a measured move. I had discussed in past videos that there were some levels down here. We didn't come down. I was kind of hoping they were going to get retested here. I think that would have actually washed out a lot of the stock and probably made it healthier, and maybe we wouldn't be having this corrective action again. But I do think that this has got to hold. If not, the levels that I'm watching for this stock are somewhere between 206.84, which would be this head and shoulders measured move low, or this 203.64-ish area, which would be the same measured move as the decline the stock had from the high to this low back before the run to new highs. So that type of a measured move would take it back down here. So that area, that 203.64 to 206 to me is a really key area. It also coincides with the 78.6 fib, which is a little bit lower at 201. So for me, that area is really key. I will be testing it long here. If that fails, though, it'll be right or right out. If not, it's very conceivable that it does come back down and test this 177 level again. I don't really see why that would be the case, because I do think that the stock has a bit of a good story going for it, but you know, price is truth, and I don't mess around with that. When I see a stock making lower highs, I usually don't, and then potentially lower lows, I'm not really looking for it for more than a trade, not really so much of a swing. Once I start seeing, you know, situations like this with higher lows and higher highs, then I'm more inclined to play by the dip. But for me, this is, you know, this is a little bit squirrely here. It's into some really key price area here with the 61.8, which had already been tested. A retest isn't as strong, being below the 200. I wouldn't be playing for this long until I see, you know, either a retest of these levels or some type of a break of the downtrend line. I will show you this, though. If we do take out this level, this then becomes the downtrend line. This more, you know, price is further away. It's still gray because we haven't taken out this low. It's still technically, you know, hovering around this old downtrend line. But this, to me, would become the new downtrend line if this breaks. So just be really cautious with Tesla. I know a lot of people have a lot of emotion with this stock, and they're always looking to buy the dip. I'm not saying that that's wrong. I just think that there has to, for me, visually, I need to see, you know, the stock break and start making moves. If you're looking to short the stock, I think if you break this area, I think you can short it down to here. Or if it has some type of a rally back up to this now primary downtrend line, you can play a right or right out short on that. If it breaks that, then of course we know it's back to being a long. But for me here, again, it's just got to hold these levels. Anyhow, was there one more? Oh yeah, Mobileye. You guys wanted me to talk about Mobileye. That's one that kind of is associated with Tesla because it's also one of these you know, guided navigation for cars. So you can see what this stock has also been doing: lower highs, lower lows. It's now bouncing back up. It's sort of breaking one of these downtrend lines. There's another one kind of to go. It held roughly around, you know, the IPO high day one. So I think if you want to play this stock long, you probably can play it a little bit long with I would say this area here is a must hold, the 61.8. I personally don't really see much in this chart to play long or short. I think it's in the process of a bounce. It's just sort of in a range. It's a young chart. This isn't really my style. If it does break, though, you know, I think that this earnings level here is key. So let's use those high of day and low of day as the signals for long and short. So anything over 49, rather convenient, is a long. Anything below 43.63 is either a hands-off or a short. So right now you can see we're kind of in the middle of that range. So for me, it's a no-touch until we see either a break of the high or a break of the low. That's it. So have a good week. I look forward to questions and comments on the stream. If you liked my video, please hit the like button, and let's have a good trading week. Cheers.